May profits be upon you. We had a very successful part one to this buy to sell setup. Great. Now let's move on to part two. Okay, we've come up into the FVG, the fair value gap. I had pointed to this one, but there's a very large one up here. All right, right above it. All right, doesn't matter which one it bounces off. But we want to see it go to a fair value gap and quite possibly a PD array. And we are in the middle of a PD array. This is a very large order block here, right? It's a pretty big order block. If we go to the daily, you can see this pretty well. The extreme of it. All right, this is an engulfing, a bearish engulfer here of this candle, and you see there was a strong impulse to the downside. All right, before it retraced. I'm looking to target that low. All right, all right. Now, the reason why I'm targeting that low is because you can see that we have a low being made and then a lower low being made. We have lower highs being made. So we're trying to follow the path that price has given us. All right. We've already uh, rated the liquidity on these lows. All right. But we don't have a close below it. I'm looking for that to happen now. All right. Well, not it's probably not going to happen today, but we do have CPI data coming out today. All right. I want you to be very careful of that. Be very mindful that CPI data could turn this market around. It has a high impact. The potential is high impact. So be careful with your entries. All right. But we want to continue the downtrend. All right. And I'm looking for that lower low to make a lower high. We've made the lower high already. The retracement is what we took the buy for. All right. I'm looking for that retracement to end and the the attack on the weak low here to begin. Every downtrend has weak lows. All right, they're weak because they didn't take out the high. All right, you understand? All right, the only job of a low is to make a new high. If it fails to do that, it becomes weak and it gets rated for liquidity. All right, and that becomes a break of market structure, which continues the downtrend. All right, so you understand what the intent is. Okay, now in order to do this, I go down to the 15 minute and I look at that area. All right, we are already in the, I already pointed out this gray area is we're in a rather large order block, and it has fair value gaps uh, already illustrated. So this we can get rid of that. All right. We already know that we are in a PD array. We already know that we have filled a fair value gap along the way, a daily fair value gap. We're in the larger second one. Okay. I want to also point out that we have reached a small um, order block here on the 15 minute. All right, we have a small order block, and you can see we are responding to it with that wick. All right. What do I want to see? I want to see price take out what do you call this? Take out liquidity. We took out liquidity here. You don't see it obviously here, but it's a high to this candle. It is the high of this fair value gap. We went past. Excuse me. We went past the fair value gap, and we went to these buy to sell wicks here. So uh, we've taken out a high. We've taken out some liquidity along the way, along with this one here. All right. And what I'm looking for is price to push down, breaking some kind of market structure. I want to see that, and then the pullback into the fair value gap it leaves behind. quite possibly a demand zone here. All right, and then we take it down. That's what I want to see. Very simple entry model. I've been using it for a couple of years now, quite a few years actually. So we look for the push up, a break of market structure, uh, and a fulfillment of the fair value gap, and maybe hitting the order block that broke, that is responsible for breaking that market structure, and then we can take it on down. This will be our entry. You understand? All right. I think I covered everything. All right. I also want to mention that we are in. Sorry, we are in premium prices, not in discount. You want to take your longs from discount prices. You want to take your shorts from premium prices, and that is above the 50% mark of this bearish leg. That's what this little illustration here is for. I don't like taking trades in the middle of the equilibrium, the middle part, the 50% area. I want to see it go like on a Fibonacci retracement tool. I like to see it go between 50 and 61.8 or 705 or something, something in this area. Okay. So we are in our area. We are at a 15-minute zone. I've seen it shoot down from these little small zones sometimes because it's within the order block itself. So we're where we need to be. It could go higher. And if it does, if it takes out this high, that means this low is not weak. It's a strong low. So if it comes back down here to challenge this low, I'm expecting it to hold and price continue what may be a bullish run. All right, may be the start of a bullish trend. All right, but that's not here. All right, what right now, as long as we are below this low, all right, and we're within this supply uh, zone, uh, I want to see. I'm expecting price to make a lower high so we can catch that ride on down. I think I've covered everything this time. All right. May profits be upon you. I will see you. And I do want to hear from you if you benefit from this video. Do, do make sure you hit the like button and consider subscribing to my channel. And do check out my YouTube and Twitter, uh, my social media down there. You'll see, if you look down on your screen on the trading view, you'll see the buttons for it. Okay. See you next time. May profits be upon you.